Good morning, everyone. Welcome to our Friday trading session, TGIF and all that. All right, the market's just opened and kind of a soft opening compared to what we have seen. The market's more or less continuing from where they left off yesterday. And yesterday it turned out to be a bit of a roller coaster in the afternoon. The morning session, pretty abysmal. The afternoon, we had a sell-off, and then we had a rally, all within the dying minutes of the session as well. So the market finished around here, not a whole lot in the overnight, and here we are in the morning, like I said, taking over pretty much where we left off. So this is the NQ. And I've also got the YM up this morning and soybeans. But of course, if there's anything that catches your eye, please let me know. I figured I'd better start taking a look at the YM, seeing how the NASDAQ is so reluctant to do anything. And the YM has been having the bigger follow through, which is a little bit odd. Normally it's the other way around. So yesterday I attempted to take the first signal out of the gate, and it didn't have very good results. So today I'm going to try to wait at least the first, 10-15 minutes. See if that doesn't help with getting a more solid type signal. One trader I know does do exactly that, and I think he does it on the Falcon, just thinking of that first signal. And what he does is, I think he'll even watch the market up to the first, 4 or 5 minutes before the market opened. And then when he gets that first signal, I don't know if I'm trying to remember now how he does it. I don't think he goes in for the whole target. Like in this case, we have a 20-tick target on our NASDAQ. I think what he does is he throws a 1 or 2 contract trade on it just to see how it works, and he'll try to pick up, $100 maybe. Just make it easy on the market. I think it's perhaps more psychological than anything, so that he can get an opening trade or a winning trade under his belt. But I think overall he's had pretty good result with that. I know he would this morning had he done that. And this morning the market's acting a little bit more like they usually do, with the NASDAQ outperforming the YM. Here's the comparable move on the YM here in the Falcon. So there's the open. And you can see not nearly the follow through so far on the YM as what we have seen on the NQ. Soybeans floundering a little. This is soybeans now on our Eagle. And you can see they went a little bit sideways, produced a couple green bar sell signals, started to press lower, and came right back now with a with trend signal. Now, the signal technically has already breached the trend line. Let me see what this would cost me to be wrong. Oop, that's outside of my limit. Cover it to there. Oh, I can. Well, it's a pretty cozy little trade. It does appear as though soybeans have been trending a little bit sideways before the next breakout. So a little bit sideways. We are making lower highs, so well, it is a onesie. Let's see, am I rushing into anything here? Oh, it's been a whole 5 minutes since the open. Yeah, it might still be a little bit early, but way to go, Josh. Josh says he picked up 40 ticks on the YM Eagle using the ATR filter. So that would have been maybe this trade right here. Let's see, is that 40 ticks? Well done. Well done, Josh. So let's take a look at this, how this would have developed for Josh. So the market's in a downtrend, a little bit of a retracement. You always want to try to take the overall context into consideration when you're looking at a trade. So this is starting to appear a little bit like a bear flag. The band is still bearish. And here it produces a green bar sell signal. The band, the ATR now moves into sync. So I'm assuming he set up his trade something like that. And very good. 40 ticks. Nicely done. I think you got out just in time because I think there might be a little bit of support coming in around here. And on a single contract. Excellent. Okay, James has got a question here. Different James than the regular James. We've got a few Jims in the room this morning. So James is asking about the trade forecaster here. The trade forecaster attempts to predict what the current market environment is and what the next market environment is likely to be. So currently it says we are in swing mode for about another 20 minutes, after which time we're moving into scalp mode. There's a couple of ways to interpret this. Usually first let's start with trend mode. The trade forecaster was very likely showing the market in trend mode during this phase here. It's not so much that the market is, going to make a huge move, but rather take a look at the pullbacks here. See how they're all minimal? The market has made a pretty steady progression. And again, that's not to say that it's, going to fall off of the map in trend mode. Rather that in trend mode, the market tends to be a little calmer. So what that means is that you can perhaps be a little bit more aggressive with your stop. So let's say this is the signal, and let's pretend now for a moment that we were in trend mode. Trade forecaster says we're in trend mode. Okay, rather than try to run a really deep stop like this, if it's in trend mode, sometimes I will run a tighter stop. Or speaking of the ATR filter, if it's in trend mode, maybe we want to take the signal on the hash mark even though it's not in sync with the ATR filter just yet. But knowing that it's in trend mode, we can anticipate smaller pullbacks. We can maybe go for a larger profit objective. because it's in trend mode. Now I'm going to go to the other extreme. I'm going to go to scalp mode. The market was very likely in scalp mode when this was going on. And once again, it doesn't necessarily mean that the market will not make any substantial moves in scalp mode, but rather that the moves are going to be a lot more violent. You're going to see larger swings in the price. So what that means for you as a trader is, let's say we get this red bar buy signal, and let's assume for a moment that the trade forecaster was saying we're in scalp mode. Well, in this case, we're against the ATR, we're in scalp mode. I'm expecting more volatile activity. Maybe I'm going to wait for the market to flip the ATR over and then use that bar as my signal bar. Maybe cover the trade a little bit deeper. Maybe instead of below this low, I'm going to go below this low. Or if I could afford it, even below this low, which I don't think I can. No. So I'm going to try to cover the trade a little bit deeper. And because I know it's more volatile or likely to be more volatile, maybe I'm going to go with a more conservative profit target. Maybe I'm just going to go all in, all out with my high probability target, not make the market work so hard. Get up there. Okay, I get my target and look at what happens. The market starts to reverse off my high probability target. Swing mode will be somewhere in between that. It's going to be more volatile than trend mode, but not as volatile as swing mode. So while it also refers to which tool might be giving you the best opportunity, like right now we're in swing mode, so we can say, well, let's go take a look at our Falcon. Our Falcon is currently not producing any signal. But if I take a look at the Hawk, here's the Hawk. I am getting a signal on the Hawk. I suppose you can make a case that it's a 3-arrow consolidation signal. Or let's go back here to this macro pullback signal. And we can look at the macro pullback signal and say, okay, well, I'm in swing mode. I know I should get a half decent follow through on the profit side. I might be a little bit more volatile on the stop side, so maybe rather than frame the trade like this, I'm going to try to look back, maybe take it above that little swing high, set up my trade like that, and So after my excellent explanation, the GoToWebinar software seems to have crashed. I don't know why that happens, guys. I'm terribly sorry. Did you hear any of the explanation about the trade forecaster, or should I go over it again? you got nothing of it. Okay. That's all right. Darn it, I did such a good job on that one too. It wasn't like the other day where I couldn't find the right words. I was on fire today. All right. Well, the trade forecaster, and I guess I'd better monitor the sound here a little better. The trade forecaster not only alerts you to what bird might be the best one to trade, but rather it gives you an idea as to what the market volatility might be. So what I was showing you is this move through here. The market was very likely in trend mode, and it's not that the market is going to make a huge move in trend mode. It might, but not necessarily. What it tells you in trend mode is that the pullbacks are going to be minimal. You can expect less volatility. Therefore, maybe you're going to frame your trade a little bit tighter. So we're going to go back to that trade in a moment. But let's say you get this signal here, and we're going to pretend for a moment that we're in trend mode. If we're in trend mode, I might choose to even enter on the hash mark instead of waiting for the market to flip over on the ATR. Because trend mode, I'm expecting a smoother progression. Rather than risk the trade way up here, I may risk the trade a little bit tighter. Rather than go with my high probability target, I might stretch the target a little bit to try to get a little bit more out of the trade, right? Because it's in trend mode. I'm expecting a little better follow through. I'm expecting a little less volatility. Now we'll go to the other extreme. We'll say, I can almost guarantee you the market was in scalp mode during this period. And again, it doesn't mean that the market in scalp mode isn't going to make a decent move, but rather the volatility is going to be increased. So here we have a red bar buy signal. It's coming off of support. It looks like it should be a decent signal. But let's say we're in scalp mode. So rather than enter right on the hash mark, since we're against the ATR and it's scalp mode, maybe I'm going to let the ATR flip over. Because it's in scalp mode, maybe I'm going to run a deeper stop. Maybe I'm going to go with my high probability profit target instead of stretching the target. So I'll enter above the high of that bar. Maybe I'll cover, if I could afford it, I would cover below the low here, but I'll certainly cover below this low, try to stretch it a little bit. Try to go all in, all out on a high probability target, and you can see what happens here. The market goes up, hits the high probability target, and then promptly begins reversing, right? Because we're in scalp mode. Swing mode will be somewhere in between there. So even though we're in swing mode at the moment, if I went to the Falcon at the time, we didn't have a signal yet. So it's not so much you're in swing mode, concentrate on the Falcon. We did get a signal here in the Hawk. This occurred during swing mode also. So if I look at this macro pullback signal and I look at the trade forecaster and it says I'm in swing mode, then maybe I can expect decent follow through. Maybe I'm not going to frame the trade this tight, but I won't have to frame it this loose either if I were in scalp mode. maybe I'll go, somewhere in between. Maybe I'll still go with my high probability target, or maybe I'll stretch it just a little bit because we're in swing mode, and you can see we would have been able to reach that. So it's not necessarily directing you to which tool, but rather it's trying to give you the idea as to which or what the current market environment is and what you might expect out of it. So the trade forecaster actually works in much the same way as a weatherman predicts the weather. Now it's kind of funny because here in the Pacific Northwest, we always poke fun at our weathermen more than most parts of the world, because the weather here in the Pacific Northwest is extremely difficult to forecast because we're right on the Pacific Ocean. We get, one time we get weather coming up from Hawaii, next time we get it coming down from Alaska, and then the next time it'll be offshore and it'll be coming to us from the mainland. So it's very odd, very difficult for the weatherman to predict, even though they've got things like Doppler radar now and so on. The weatherman still predicts the weather in much the same way as they did 50 years ago. Namely, they'll look at their data and they'll say, okay, well, when the barometric pressure was like this and the wind speeds were like that and the cloud formations were like this is the weather that we got. So the trade forecaster says, okay, back in the history of the chart, when the market conditions were like so-and-so, this was the market condition we got. And this is the one that we're going to get. Now, again, that has nothing to do with the amount of follow-through. We've seen the trade forecaster in scalp mode where we get some very substantial moves, but there's also, it tends to be a lot more volatility attached to it. So it's a kind of tool that helps you formulate your trade, formulate your profit targets, formulate your stop losses. But, it will also very often, when you're in trend mode, you will very often get a substantial move. When you're in scalp mode, you'll very often get a lot of sideways action. See, this could have been scalp mode right here too, but look, it had a very decent move lower, but also very difficult to predict and catch because it was probably scalp mode through here. It might have started changing over to swing mode right about here, but big move down, big move up, no real way to catch it on the eagle. So this was the trade that we were looking at here. I think it was somewhere about there. So soybeans looking like they're going to plod lower. Yeah, good question. James is asking, how can one determine historically what the trend forecaster was saying? I do believe it works in market replay. I don't remember exactly because it's been a while since I've done it. But I do think you can go into a market replay mode, download the data for a particular day or group of days and play it through. But yeah, unfortunately, it's not the type of tool that you can simply scroll back in your chart and the trade forecaster goes back and forth, because it's analyzing the data from the last 25, 30 days or 50 days, whatever it is you have plugged in. I think it needs 25 days minimum, which would be a little over a month's trading data. But I'm pretty sure it works in market replay mode. Hey, Sean. Nice to see you too. All right. Sean's asking, can you run through how many days of data you have for your tools? Sure. Okay, Trade Forecaster. It looks like I've got 30 days of data on the Trade Forecaster. I do believe 25 is the minimum. The support and resistance lines, oh, I only have 10 days on those. I thought I had more. And the day ranger, if you want the 30-day average range, you have to have at least 30 days. I've loaded 50, although really you just need to put in 31. I just like even numbers. I'm not OCD about it, but I do like even numbers. Alrighty. Yeah, I don't know that stupid recording software, why it cut out. James is asking about the Geiger counter. Why don't we go take a look at that? All right, so this tool here is the Geiger counter. And the Geiger counter is essentially a way for you to visually read the tape. The tape, for those of you who don't know, is what we usually refer to as the time and sales. So there's your traditional time and sales. And if I put the NQ on here, we get this kind of thing. Right, so you get the bid and ask, and you get this type of volume coming through, and people try to follow this for a clue as to whether the market's going to go higher or lower. A lot of times they'll look for block trades. You can filter some of this by putting block signals in. A block is just a larger quantity of trades. If this were the E-mini, you're going to see a lot more block trades coming through because I have a very low block of only 10 ticks. You can see a lot of onesie twosies, but look at those blocks coming through. So the E-mini, a lot more active. And again, the idea here is that if you see more green than red, maybe the market's getting stronger, and so on and so forth. All right, so what the Geiger counter does is it gives you a visual of that, which makes it a little bit easier to interpret. You get the dial, which shows you the current bid and ask. You get the needle, which is showing you the average, and right now the average is more bearish than bullish. And you get the tape, the historical number of trades that went through here. What you're looking for is you're looking for buy, and you also get this little envelope around your bar, which is your trade indicator. It's giving you your very short-term bias. The Geiger counter was first developed because one of our members was saying, you know, it would be really great if you gave me a way to judge whether or not I should stay in a trade. So it was the type of situation where he might have sold this trend change signal, the market's moving lower, and now he's starting to wonder, should I be looking at taking profit? Should I tighten up my stops? Is there more room to the downside? What should I do? So the Geiger counter was initially developed that way, although you can also use it to initiate trades. So if you're like the other Jim in the room who was probably anxious to sell this failure of the buy, he probably got in here to short this. And once again, if you take the context of the chart into consideration, it does look a little bit like a bear flag, doesn't it? The market's coming down, has a little bit of a retracement, no serious upside trend, and then it shoots to the downside. All right, so let's say that we shorted from this signal right here. And this is all current now. So we're short. The Geiger counter was red. Everything is looking okay. Now all of a sudden our trade indicator, our short-term trade indicator is saying, oh, we're getting some buying pressure coming back into the market. The Geiger counter is still bearish, but it's starting to even up a little bit. You can see that our plot, our historical plot, is getting a little bit higher. Now the needle is neutral. Okay, we're still heading lower, but we're still getting some buying pressure in here. So what that would mean to me is that, all right, maybe I should start getting more aggressive with my stop. Maybe I'm going to put my stop above there. And maybe I'm going to go with something like a bar high-low strategy and just roll my stop bar by bar. In which case I probably would have been stopped out right here. I would have enjoyed a little bit of a profit, and now I'm looking for the next opportunity. All right, so that's the way that the Geiger counter was designed to be used. The programmer mentioned that if you see a spike, like a little island, not a big island like this, but a little, a little island of, oh, okay, I guess I gotta move this out of the way. I'm not doing a very good job of that. Okay, if you get a little spike in the histogram, that could be a sign of stop running, where the market is loading up on the buy side or the sell side, only to capture as many buyers or sellers as it can, and then it will reverse the other direction. So if you see, like I say, a little abnormal spike in the trading there, that's very often a sign of stop running. Okay. Yeah, so James is asking, so this envelope that you see here, that's part of the Geiger counter. Yes. The only reason I have the Geiger counter on the Raptor is for clarity's sake. Because I'm showing you 4 different tools here. I've allocated 1 tool per bird. Because, well, like I say, it just makes it simpler. But that does not mean that I cannot put, okay, that doesn't mean that I can't put the support and resistance lines on here. Where are you? I lost it. Shoot, where'd you go? Oh, this is terrible. Okay, trade forecaster. Huh, okay. Oh, there they are. I knew they were around here somewhere. I don't know. Oh, I hope I didn't break it. Okay, so I've got the trade forecaster, I've got the Geiger counter. I could throw the day ranger on here. I've got my support and resistance lines. It doesn't not mean that I can't do this for every single chart. Oh, I got the wrong start time, I think. Oh, I got the Falcon Swing Trader on here. That's what I'm seeing. Okay, trade forecaster, Geiger counter, support and resistance lines, trade forecaster. Yes, I've got the wrong start. Okay, so I've got I've got my support and resistance suite on here. I've got my trade forecaster. I've got my Geiger counter, but the information is redundant. So you'll see here's the primary support line, 46.1350. Well, here's the same primary support line, 46.1350. Here's my trade forecaster. We're in scalp mode for 13 minutes, trend mode after that. Trade forecaster, scalp mode for 13 minutes, trend mode after that. So I only put one per chart just to make it less confusing. But definitely, you can put all these tools on each of your charts if you want. Geiger counter, I'm keeping trade forecaster. So to answer your question, James, if I put the Geiger counter on the hawk, I would also get that trade indicator on my last bar. But the figures will be exactly the same. So whether I have my Geiger counter on the hawk or the raptor, it really doesn't matter. Those types of our other tools are all universal. And the other James is letting me know that the advanced decline a little bit in favor of the sellers today, about 1,100 buyers, 1,600 sellers. So we're looking at about a negative 500. I did get a new toy, which I'll show you guys because I'm not sure the recording is working today. I might as well show you this. So this is, let me scoot this over a little bit. Not a good example today, but for those of you who are familiar with equivolume bars, we now have equivolume bars available for DTS. Maybe I want transparent. No, probably not. I probably want black. Yeah, there we go. There's the regular Falcon. You can see how light the volume is. There was some buying support, came in right here. And there's different styles of bars. We get the gradient bars. We get the traditional power, what they call the power boxes. So we can see there was some buying support here. The market comes down, volume's kind of light. Little bit of buying support, not as much as we might have anticipated. Volume again, a little bit light. The sellers stepping in up here. Nothing too dramatic. Nice thing about equivolume is it gives you a very simple way to factor volume into your trading equation. The width of the bar shows you more volume or less volume. This is all overnight or the end of the session. You can see how thin the volume was when the market rallied. I'm just trying to find a half decent day here where I can show you a little bit more activity. Look at how slight the volume has been. Let's get a half decent move here. I'm going to condense the chart a little bit because sometimes that makes, oh, here I'll do it on this one. So you can see a little bit more selling pressure here. Right? There was some buying pressure here. The sellers came back. So good selling pressure through here, good selling pressure through here. This is a signal you could take with some confidence out of the open. So pre-open, there was big selling going on there. See the width of that bar? That tells you that there was a decent amount of selling. I'm going to move into power box mode. So a lot of selling going on here. And then we come into the open, reasonable amount of selling again. More sellers jump on board. And that's what ended up pushing the market lower still. So that's a new toy that I get to play with for a little while. But we'll move back into candlestick mode today. Oops, didn't take. Where are you, Falcon? All right, are we getting anything tradable? Oh, we just got a green bar sell here. Doggone it. This would have been an enticing green bar sell to take. So you can see we're moving out of scalp mode into trend mode, so we can anticipate the market perhaps to be a little bit more responsive. Certainly you could set it up like this. Once again, looking at the context of things, definitely a little bit of a downtrend. We've broken obvious support. We can expect two moves in the direction of the breakout. You know, all these things, it's looking a little bit like a bear flag. We're coming out, we generate a green bar sell signal, which is a high probability signal. And it looks like we're making fairly decent progression on that one. I was looking for that, and I missed it. Darn it. Jim is asking, I haven't gotten an email yet on the S&R deal. Adam just told me about it yesterday. I think he's emailing before the weekend. The special is available next Wednesday. It will be available until August 5th. I do know that. So you don't have too much longer to wait. Sunkim is asking about the volume bars. They're not available just yet, Sunkim. They will be available shortly. We're just doing the last tweaking of them. I shouldn't have shown them to you. Don't tell Adam. But they're very interesting. As you know, price and volume really are the only two real things on the chart, right? You can put stochastics on your chart, you can draw trend lines, you can throw any other indicator on your chart. It's not really there. The only thing really there is price and volume. So they're, again, they're the result of your requests. See, we take your feedback very seriously. People were writing Adam saying, Adam, I need a volume component. I need you to show me an easy way to interpret volume. So we put our heads together, did a little head scratching, and we said, hey, how about we do this? So, if you guys have problems or things that you would like to see, it's worth sending Adam an email. You never know what he'll be able to do with that. I'm looking forward to seeing how those boxes respond when the market activity picks up again a little bit. Like obviously things are a little bit light right now over the summer months. Looks like the Raptor gave us a very early trend change signal right here. Now you'd really have to be on your game to catch that one. I'll be honest, it's a failure of the buy. It's a test of the extreme. You really got to be paying attention. It's nice that it occurred right in the middle of our morning trading range. And a nice progression lower there. You can see our green bar sell also had very good follow through. We've hit our profit objective there. So now we're in trend mode for about half an hour. Not a huge trend mode, but we might be seeing a little bit more follow through. Jim says he's watching for the reaction here to this 10 a.m. low. And this trading range is a brainchild of Jim, who is one of our DTS members. He trades the Raptor. And what this does is he's highlighting the first hour of trading, the first half hour of trading. So you get, the premise is that the big traders get their trading done early. And when you're watching things like volume, that is so true. You see a ton of volume come in for the first half hour of trading, and then the volume kind of dissipates. It's not, again, that's not to say there won't be any significant moves afterwards. It's just that sometimes you get a better feel for what the market range is likely to be after that first half hour. So you can see this was yesterday's range. Oh, where was it? So this was yesterday's range, and you can see the market broke out, retested, tried to go higher, came right back in, went down the underside, retested, tried to go lower. So that's what we're looking at now. We've broken through. This was a significant level. We should see the market try to come up and retest. Okay, well, the advanced decline, Jim says, getting a little bit more favorable for the sellers. Let's see if we're able to pick up a signal somewhere. Jesus is asking, what's the support on the NQ? Well, let's go here to the support and resistance lines. We've currently broken the 45.94 line. I think we need to go back to yesterday's trading. Yesterday's low, I think, is going to be the one that's going to be next in line. That's going to be around 45.85. One, two. Oh, yes, definitely still bearish, Jesus. Jesus is asking, do you think the market's going to be bullish or bearish? No, I think we've definitely got a bearish tone to the market today. It's a matter of waiting for our next entry opportunity. if you didn't catch it when it fired back here or on the first micro macro cross here on the Hawk, that was this signal right here. Did we get a signal on the Falcon? No, the Falcon didn't really give us a signal. It tried right here to generate a signal, but it didn't. Unfortunately, we're on hold mode at the moment. I think what we need to see is we need to see a little bit of a retracement here, a little bit of a retest. See, remember what happens when the market gets into these sideways modes and we finally break down. We'll get a retest, and then we're going to see whether the sellers were serious about breaking out, in which case we should get a sell signal somewhere through here. So I would not suggest blindly selling right now unless you've got the ability to keep a massive stop. Because we are on some support here. You see at 45.94, it looks like we're getting a little bit of a reaction now. So we have to wait for our next opportunity, really. But yes, I think we're in a bear market today. It might take us, 15 or 20 minutes to generate enough of a pullback to get another signal. Okay, James, or Jim, I'm going to call one of you Jim and the other one James. Jim, Adam just sent me a text message, and he said that for those of you who are interested in the support and resistance suite, that's going to be coming on special. Here is the discount code that you can use if you wanted to pick up the suite right now. That's good for 20% off. It has to be done in all caps, so just as you see. Oh, okay. The one James goes by Jamie. Good to know. So one will be Jim and the other will be Jamie. So Adam says there's the discount code. You can pick it up early. That way you can even have it before next Wednesday. Next Wednesday's public open house, I'll be doing a presentation on the Ultimate Support and Resistance Suite to introduce the month-end special. Good question, Josh. Josh is asking, do we have any DTS members that are funded by Top Steps Trader? I don't know. quite honestly, except for the people in the room, or the people that email me, I don't have that much contact with a lot of DTS owners. You guys are the only ones that I really interact with. I know there were a few that did the Top Step program. I should actually sign up for it again. I did an intro period with them, and I just had too many things going on that I couldn't keep up with it. Not that my life is any less hectic now. Okay, here's our soybean trade, which has been working, making a little bit of progress. You can see we're currently in trend mode. And once again, it wasn't that we had a huge progression here, but look at the pullbacks. Very minimal on the pullback side. In fact, I probably could have framed that trade a little bit tighter than I did. After which we're going to be moving into swing mode in about another 10 minutes. But I don't think any reason to begin panicking just yet about our stops. Lance is asking, what is Top Step? You can search it. It's Top Step Trader. It's a trading program. I do webinars for them occasionally. Actually, I'm going to be doing a webinar for them in August. It's kind of like a trading club where they'll track your results, so there's no cheating. And if you actually produce profitable results, they'll find you money to trade. How cool is that? Now, if you think there's no pressure trading your own money, wait till you try trading other people's money. Been there, done that. It will keep you up at night. As much as you tell yourself, you know, what we're doing is very risky and everybody knows the risk, I don't know if you can really help but feel some sort of responsibility, especially when you take a knucklehead trade and you end up losing some money. But it's a great program. It's loads of fun, especially if you hit a winning streak. You know, the bragging rights are great. Yeah, you're right. Josh says the rules are very strict. If I remember right, it's they're looking more for, like, if you're trading intraday like we do, and I've tried several programs like this, so forgive me if I'm mixing up the details, but they weren't so keen on signals of what we might produce on a tool like the Hawk, especially in faster markets, because they wouldn't be able to relay those signals to their paying members as quickly. If it's the same program as another one that I did, people could actually subscribe to your trades. Although maybe I'm getting the programs mixed up now. But there was one where you could subscribe to like my trades. You could see what I'm trading, and you could piggyback your trades on mine. But it would be very difficult for you to keep up with me on a tool like the Hawk. Not so difficult now because the signals are not producing as quickly. But say during the winter months or spring months when the market is much more active, it would be very difficult for you to keep up with that type of thing. All right, Suncom, you're having some problems at the checkout with the code. Let me find out here. I've got Adam on the other line. All right, Suncom said he was trying to make the purchase with Firefox. Yes, do try Internet Explorer. I know sometimes the browsers will make a difference. Yeah, Tony, I think you're right. Ray Burke was doing the Top Step program. I haven't spoken to Ray for ages. I should touch base with him, see if he's still doing that. Oh, and I did get it wrong. Thanks, Josh. Josh knows more about the Top Step program than what I do. I did get the different programs mixed up. There is another program out there which will allow you to subscribe to a trader's trade recs and allow you to piggyback your trades on his. But with Top Step, Josh says they'll fund you with their money if you follow their rules and if you're making a profit. You can get up to 80% and they'll take 20% for their trades, which is a fantastic way for you to transition from paper trading into actually trading for a living. I'll tell you another thing that if you choose to go that route, and it's a great one to try once you're become consistently profitable. Trading other people's money is going to be a little bit stressful, as will be the quantities. That takes a little getting used to also, because all of a sudden, let's say you're trading a $10,000 account and you're picking up 50 or 100 bucks a day, which is very good for a $10,000 account. Remember, if you can do $100 a day, that's $20,000 a year. If you do $100 a day, I guarantee they will beat your door down to get you to trade for them. I know, doesn't seem like a lot, but it's the consistency. You'd be surprised how many guys are out there who try to swing for the fences, try to pull in $1,000 a day on a $10,000 account. No, it's a numbers game. It's always been a numbers game. It always will be a numbers game. But yes, if you have the dream to be a professional trader, okay, Suncom, you can try it again. Adam says the code was disabled because technically the promo wasn't supposed to start until next week. So he says he's tried it. And it should work now. Well, it looks like we would have had at least one decent opportunity on a sell here for the NQ. I'm more pleased with how today is progressing. Here was a nice first micro macro cross signal, also with good progression. But as was with the other days, it's almost as though that first signal, or the signal right out of the gate, is really the only one we're going to see today. The YM also had decent follow through on the Eagle signal, even though it was a little bit lagging. Looks like we're just hovering above our profit objective. And that profit objective would have been because when the signal printed, we were against the ATR. Honestly, I can't tell you that I would have taken it on the hash mark. If I did, we would be at our profit target. Rather, I would have let it roll over the ATR, used that bar as my signal bar, and probably done something like that. So looking for a couple extra ticks out of the market, I would be squeezing it right now. I would not give it any more than the high of this current bar. That's my opinion. I think we're going to see it press just a little bit more. Oh, way to go, Josh. Josh says he was almost funded by Top Step a couple of months ago. Good for you, man. He says, I hope to go back to Top Step using DTS. Yeah, big things. Look at the overall context of your chart. Try to hold out for the cherry trades, right? Try to hold out for those real high probability trades. Try not to get suckered into taking a less promising trade. It's not the frequency of your trading, it's the accuracy. And that's where a lot of people drop the ball. A lot of people think they need to be trading actively in order to make money. Some of my best days have been when I take 3 or 4 trades. And they're all winners and they all turn in, $200 or $300 profit, not really knocking it out of the park, just kind of an average trade. And at the end of the day, I look back and I say, well, I'm up $1,000 today. That's all right. Nothing wrong with that. I've told you all the story before, but really you just need 2 solid signals a day. Okay, so very interesting here. Our hawk has pulled all the way back into yellow bars. Our filter is out of sync. Everything is out of sync. We'll see whether we come back with yet another signal here. That would technically be a first micro-macro cross signal, which tends to be one of our high probability signals. The only thing that concerns me is that how slowly the market is moving at the moment. It looks as though the buyers are pressing a little bit. You see here on our Geiger counter, getting a little bit more buying activity. A little bit of a tug of war going on. Oh, Jim says there's a lot of puts out there. A lot of selling options. Good question. Josh is asking, is there any plan to have like a trading or a Skype room for members in the future? Yes, and I'm going to be meeting with Adam here in about 20 minutes time. I will mention that to him. I'll remind him about it, see if he's made any progress on it. Well, if you're in the soybean trade, you might want to consider locking in a little bit of profit also. We'd be low enough by now that our break-even trigger would be hit. And we are generating another signal here off the soft edge. And normally soybeans plod along reasonably well, but I don't think I would let it get above this bar either. Back into yellow bars here with our hawk, working on a possible trend change signal here with our falcon. Alex, good question. Alex is asking, in the NASDAQ hawk, why aren't you selling now? Well, I need a signal to print. We're into yellow bars, so yellow bars on the hawk are a no-no. The only yellow bar signal I would consider is a 4-arrow consolidation. I suppose we did have one here. 1, 2, 3, 4. Yeah, we did have a 4-arrow consolidation right here. 1, 1, 2, 3, 4. I suppose it depends when you started counting that. Also a macro pullback. But I'm waiting for the first micro-macro cross signal to see whether or not we get one. We haven't really got one just yet. Everything was still kind of out of sync when this signal here printed. I need for everything to come back into sync. The first micro-macro cross signal is this one right here, where your trend lines, your bar color, your signal, your filter, everything is in sync. I'm also watching this possible trend change signal here in the Falcon. It's working on an early trend change signal. The early trend change signal fires just as the trend line changes color, but the tip-off is this little up, down, up pattern. The nice thing about the early trend change signal, excuse me, as opposed to the proper trend change signal, is that you're usually able to cover it a little better. Like I can cover it right below these lows. I might throw a onesie on here. because this is counter trend. Jim says the advanced decline still very lopsided, about a negative 1,000 right now, so definitely more sellers. And, you know, like I told you, if you take the context into consideration, the market's been in a decline all morning. It's not to say it won't rally or that it can't rally, but this is definitely a counter trend type trade. So if I'm going to do it, I need to be aware that the market is, you know, might not make my profit target. But we'll see. I've given it ample room here to fail. I'm not strangling the trade. I'm not going to get stopped out on a little hiccup. But at the same time, it's not quite as inviting as maybe a with trend trade would be. And the problem too, maybe the biggest problem with counter trend trades that I find is when I'm in a counter trend trade, of course, it makes it very difficult for me to take a with trend trade now. If the market comes back and again flips the trend line and gives me a sell signal, then I'm already stuck in the buy scenario. Well, Jim says the DAX is trying to firm up and the bank index is trying to press a little bit higher, so maybe I'll catch a lucky break here and see the market rally somewhat. So we're coming out of trend mode. So here was our trend mode. Nice little progression lower. Now we're going to be moving into swing mode in a couple minutes. So we might anticipate a little bit more volatility here. Maybe that will result in a trend change. But I think it's a seller's market today. All right, you guys, I'm going to meet with Adam in a few minutes here. If you are trading the rest of the session, we might see a little bit of a shot here to the upside, but as I mentioned, the indices look very much like a seller's market today. Soybeans still floundering. I would not give them too much room to the upside. I think I would protect a lot of that profit that you have. The YM, again, looking more bearish than bullish. Have yourselves a wonderful weekend. I will see you again on Monday morning. We'll talk to you then. Bye for now.